Alright, good afternoon everyone. Today is Wednesday, February 1st, 2012. The first day of February. Alright, let's just jump right into it. We didn't have any trades today. Not a single trade. Is that true? That is true. We didn't take a single trade. We tried to. We did take one euro trade. We got out at break even on that. There was one trade that set up. There was only one trade that set up here on the ES. It was right here, and we actually didn't take this trade because we had another time frame that was looking like it was going to move against it. It did actually move against it. I would have gotten a break even on this trade had I taken it because, well, let's just say we got our higher swing pivot here. We pulled down to the BBC, which was outside the box, so it met all the requirements. Okay, we had a fresh bubble. This was the first pullback to the BBC with the fresh bubble. So we had a long trade right here. Now we had another time frame that said it was going to go down from here, and the market had been chopping for quite some time, so I wasn't real comfortable with trading right here. I didn't put the trade on. Had I put it on, it ran up here, put in a double top. I would have moved my stop to break even. I would have been stopped out break even right over here. Okay, the thing eventually did, right over here after an hour and a half, I think, did go to the profit target. But I would have been stopped out of a break even. You can see right now we have a higher swing pivot, and we almost have a fresh bubble, so we almost have another trade setting up here on the 4-tick range. On the 10,000 contract, this dot right here is resistance, and it just printed it up above us here at 1325.75. The problem that we've been having this morning is we're at the zone here on the YM. Sometimes we're above it, sometimes we're below it. But this morning, when we first opened up this morning, we were right here in between these two zones, and there was only 4 points in between these two zones. So I was saying, as soon as it opened up, I was saying, we're going to have a problem if this is the way it's going to be this morning, because we're just zone bound and range bound. And then we ended up being much more range bound than I had anticipated. We got above it there, we got below it over here, and then finally we're getting back above it right now. Alright, there's no trade set up here in any of these markets at the moment. I will go over some of the other markets quickly here. We didn't take any trades, but I will show you some trades. Alright, some trades that set up, some trades that some of the partners took, some trades that none of the partners took, I'm sure. This is the euro. I'm going to blow it up so you guys can see it a little better, a little more all at once. I've drawn arrows on here, and I was drawing these arrows on this morning. Some of them after the fact, some of them as it was happening. These are trades that set up this morning in the euro. Okay, not all of them won. I think there was, didn't I highlight one of them in here that didn't work well at all? I'm sure there was at least one that didn't work well. I think this one right here that was right in the zone didn't work well. And let's see. I know there was at least one. But anyway, let's just go over the setup itself, alright? This is the combo down here. What you're looking for is for the white line to be moving up, we'll say, to turn up and be on the left side of the green line. Alright, when that happens and you get a close above the MA1, you look for your entry. Your risk is going to be down below the swing pivot that got you into the trade. So down here. Okay, when do you get out of the trade? Good question. One thing that you had going for this to suggest it was going to be a longer trade was you pierced the bottom of the envelope at the same time down here. Well, shortly after the entry, you pierced the bottom of the envelope. That suggested it was going to be a good moving trade. Alright, it did go right up to the zone. That was a nice place to exit. If you wanted to put on a 10-tick bracket or an 8-tick bracket, well, you got that pretty quick without too much risk at all. If you wanted to just ride your stop behind the MA1, then you would have gotten out right up here. Okay, that's one way that people do it. Not everybody does it the same way, but you certainly can. Over here, it flipped around. White line to the left of the green. And we closed down below the MA1. Risk is going to be above this pivot right here that got you into the trade. Okay, so there was minimal risk on this one. Price did pull all the way back up to that pivot, but before it did, there were about 8 or 10 ticks profit in the trade. Then it pulled all the way back up to that pivot, and then it really collapsed. Okay, so there was a ton of opportunity in there as well. Same kind of stuff going on here. It turned up to the left of the green. This one right here might have been the one that you would have gotten stopped out on. Alright, your risk would have been down here. Once it flipped back on the other side of the green right here, and price was below the MA1 and below the weekly trading zone. You know, trading right inside the weekly trading zone is always dangerous, whether you're going long or short right here. This one would have worked out. This one probably wouldn't have. This one over here, we pointed this out as it was happening. I think this is the one I actually took this morning. And then it crossed on the other side of the green right here, so I got out with break even on it. But it did move up, I don't know, moved up 3 or 4 ticks while I was in it, and then I got out at break even. It went into the zone, then it turned around, came out of the zone, turned around again, went into the zone, turned around again, but right over here the green is to the left of the white. Alright, so we don't want to do that. Again, same thing here, green to the left of the white, so we're not interested in long. Here the white is to the left of the green. Short opportunity, white to the left of the green, long opportunity. A couple other opportunities to get into that on the way up if you didn't get it over here. You could have gotten it right in here. It was kind of flattening out right in here, but you still could have gotten into it. It turned down right here for a short move. This was, I think one of our partners, Bob, took this, I think, from, I want to say, 09, yeah, 09. I think he said down to 32 even, but I'm not sure. I don't remember exactly. But so there was a little bit of opportunity right there. Then it turned around, moved up a little bit again, and now it's moving down again. It's a little I don't know what to call this, wiggly, a little choppy right in here right now. But you can see it's going up and down and up and down and up and down. But keep in mind that each one of these up and downs, you know, from right here, this little tiny move right here, from 32.04 up to the high of 32.12, that's 8 ticks. That's the equivalent of 2 points on the ES. All right, right here, this little move down, let's say right here at 32.04 again on the opposite side, down to 31.92. That is 12 ticks, 3 points on the ES. And this little move up over here, let's say you got in here. All right, your risk is down here. You're still in the trade. That gave from 32.08 to 32.13. It gave 5. You know, it gave the equivalent of a little over a point on the ES. If you wanted to move your stop up to break even at that point, that's fine. If you wanted to move your stop behind the MA1, you lost a couple of ticks, but either way, you know, the euro had plenty of opportunity this morning. Dwayne talked about the euro on larger time frames, support and resistance stuff on the euro. You can see I don't have any support and resistance on here at the moment. You could put it on, but Dwayne was looking at the bigger picture stuff with the tweets that he had put out. Okay, looking to take 100 pips at a time instead of 20 or 30. All right, I think it is 12:30. That was the euro. There's another thing I want to show you guys in here. You know, we talk about the naked MA1 on the 2100 tick on the ES. I highlighted some of these based on what we went over in the partners meeting last week, guys, with the combo. The same stuff I just went over on the 6E. Same stuff here. The short opportunity right there. Long right here. Short right here, that wouldn't have worked out. That was pre-market though. If we stick to what happened after the open, and we traded just the naked MA1, this is a 2100 tick, and that was actually into yesterday. Right here today, you can see we had an opportunity right here on the long side, an opportunity right here on the short side, another opportunity here on the long side. This would have stopped us out, but you should have been long with your risk down below here. So you still would have been long here, not short. But if you decided to get out of the long after after getting in here at, we'll say 13.18 quarter, had a high at 13.20 quarter, you know, you got 2 points out of it. And if you decide to short the short side of it, you lost that 2 points right there probably. Let's see, right here was an opportunity to go short for a couple. Here, long for just a little bit. But the green overlapped the white right there, so you would want to get out of that one pretty quick. here short for a couple, here long for a couple more, and that pretty much brings us current. That is the 2100 tick naked MA1 using the CF combos, the CF combo, the way that we went over it in the partners meeting last week. And let's see, I want to show the Russell quickly. This is a 6-tick range on the Russell. You see, it got all messy and choppy in here, but before it did that, there was opportunity right here. White line on the left, moving up. White line on the left, moving down. White line on the left, moving up. Let's see, white line on the left, moving down. Now this one here didn't work out. That was right on top of a high impact news event. White line on the left, moving up. White line on the left, moving down. Look at the numbers over here on the right hand side. Okay, this is the Russell. It's $10 a tick. Okay, $10 per tick. So a move from, say, right here at 793.7 down to the bottom right here at 794.5. That's $120 per contract right there. Okay, that's the equivalent of 2.5 points on the ES roughly. Okay, move up, move down. I just wanted to illustrate to you that it works on, on a whole bunch of different markets. Let's see. I was looking also at crude this morning. I don't know if I still have a crude chart up. I do somewhere. Here it is. All right, we watched crude live for a few minutes this morning, but basically the same stuff with crude. I'll just scroll back. I thought I drew in a whole bunch of arrows on it. I did. I drew in some arrows. And I'm trying to scroll, but it's not letting me. All right. Basically the same kind of thing. White line on the left, the move up. And we're scrolling. White line on the left, the move up. And we're scrolling. White line on the left, the move down. This little move up, bigger move down. Bigger move up right here. I think you guys all get the picture, right? White line on the left, the move up. White line on the left, the move up. White line on the left, the move down. This is crude, all right? And crude was certainly moving around this morning. It trades pretty actively from about 8:30 to 11:30 Eastern time. So just wanted to show you guys, those of you who trade crude, those of you who trade the Euro, who trade the Russell, the ES, the YM, stuff works all over the place. All right. I don't see any questions popping up in here. I'm opening it up for questions, but I'm going to stop the recording here. Okay.